Hey there guys, how's it going? It's Ross here from Ross Trades. So today I'm going to be breaking down how I made 50% in the last 2 weeks on my PA Apex account. I have requested a payout, as you can see right here, which is pending. I'll go through everything and show how I've been, consistent in my results and how I've managed to flip this account basically pretty dramatically. I made $25,000 on the account in the last 2 weeks. Yeah, I'm just going to break down how I've done it, what risk management strategies that I've used, and my approach to the markets, basically. On my first day, I made $2,000 straight off the bat. Now, you might be thinking, why did you push so hard on the first day? The conditions were just good. I took the opportunities to take it, basically. My initial strategy was to try and make $1,000 and then get that over the next 2 days. I held the trade a bit longer than I probably should have, but I held it until until the trade had reached terminus. Basically, if I made $2,000 in the move that was presented to myself on Friday, I knew that I could be pretty quick to get out of the trailing drawdown. The only setback with making that 2,000 on the first day is that I had to be ballparking 2,000 a day after that to sort of meet the consistency rules. Apex requires you to have a minimum of a 30% consistency target. You'll see later on the graph goes much higher, but this is because in the last few trading days on this account, like basically this week, Apex had massive issues with both Rhythmic and Tradeovate. They had to combine trading days together in terms of their P&L, which is why you see 5,000, another 5,900. I did increase the amount of profit that I took towards the later stage of these trading days. It wasn't as much as this. It was around the ballpark of 2 to 3,000. I think my last day was my biggest day, and I'll show you this in my because I track my performance as well on a different piece of software called Kinfo, and I'll show you that. So when you see 5,800 and 5,900 on the later days, that's not the case at all. Yeah, so if we go into the chart here, you can see this is the account balance. We started off at 52,000 and ended on 75,000. That's making 50% over the course of the 11 days. I only had one losing day, which was negative $200, and every other day was a $1,000 plus day. And I'll show you. It says I made $94, but I don't think I did. I think there's a bit of a miscalculation there. There's 20 trades. So basically, I went into really deep drawdown on the second day and was able to pull myself back out of it. So normally I try to aim for about 10 trade, maximum 10 trades a day, because I trade so many sessions. That day, if I'm fighting out a drawdown, that's when you start seeing the 20 trade days, and some of those trades I'll hold past drawdown and get myself back out of it. Now, it's difficult, right? Because some people should say that if you take a loss, you just be done for the day. That if you're able to keep control of your psyche and you know when to pull yourself away from the charts temporarily, for me personally, I only need 15 minutes to calm down. If I'm going on tilt, I can recognize that very quickly, pull myself away from the charts for 15 minutes and come back relatively clear. I might not be back at 100%, but I know I'm going to be in that 80% regenerated. If you go on tilt and you destroy your account and you're still doing that regularly, you've still got personal growth to work on, and that's when psychology is so important when it comes to trading. If you're not on top of your game psychologically, you will not be able to flip your account like this. Every day and every session has pitfalls and windfalls and moves that will try and catch you out. And if you end up getting bitten by them and getting burnt, then you're going to start making some iffy decisions. So here's my strategy throughout the day, right? So I'll wake up at, let's work in New York local time. So I'll wake up at 2 a.m. and I'll get on the charts for 2 a.m. for when London opens. And London opens around 3 a.m. But from 2 to 3 a.m. is a window that I try to trade, because there's normally a nice move in there, even on non-news days. I'll get in there and I'll allow myself one trade per hour of each session. Right, so London is mainly contrived of 3 hours. So you've got pre-open, you've got open, you've got the post-open protraction, and then you've got a consolidation period from 5 till 6, and then from 5 till 6, 6 till 7, there's a bit of a down period, and then from 7 o'clock onwards, you've got your sort of New York pre-open, and then your open and all that sort of thing. What I allow myself is each hour I'll allow myself one trade, or if I get it wrong, depending on if it's a directional bias problem, I'll walk away. If I can't see something clearly, see a clear draw on liquidity, I'll walk away. If it's something I can correct very quickly and it's just a mistake in my placement, or I was just a little bit off and now my bias is fully corrected, I will allow myself a second trade in that session. It's very dynamic. The way that I trade is not systematic at all. right? And everyone says you need a systematic way of trading. I completely disagree. And there's a guy on Twitter as well called Greco the One, very very popular on Twitter. He's absolutely killed prop firms. Like one of the most aggressive traders I've seen outside of like the ICT space, and he is strictly a intuition based trader. So I apply the same sort of approach. So I use ICT's concepts. I've spent so much time on the charts. I know exactly what I'm looking for. I know when I'm wrong, when I'm right, like when to push, when to not push, when I can correct myself, when I can't correct myself. And it's experience and exposure to the markets that will get you to the point where you can trade based on intuition. If you can trade based on intuition and you know when to pull yourself away from something, or when you're totally lost, or when you can push like quite hard. I don't recommend everyone to trade like this. This is hyper aggressive. You know, like when you think about it, you've got a $2,500 drawdown, right? Let's talk about risk management for a second. What the strategy was that I used to try, to basically flip this account the way that I have done. So what do I do with $2,500? And also with Apex, it's trailing, so you got to be mindful of that. So what I try to do is divide that up into 10 trades, right? So that basically means I can only risk $250 per trade, right? Now, that's basically what I did. So I risked. So when I started out with this challenge, I risked $250 on my first trade, and my risk to reward is between a 1 to 3 and a 1 to 4 on the low end, and it can be as high as a 1 to 8 and a 1 to 10, 1 to 12. It depends on the setup. It depends on what I'm given. Depends how aggressive I am with my stops, and whether I scale into my trades or not. So with I can't remember what I did with the first trade. I think the first trade was in London. I risked 2 minis, and I had like a 5-point, like a 4-point stop loss, something like that. So that would be. So I think it was like 4.5, and I was targeting about like 20 points, something like that. Yeah, what's that? A 4.4 risk to reward with 2 contracts. That risk is $180, and I made $800 profit on that trade. For example, it was something like that. I can't remember off the top of my head. If I do that once, or sometimes even twice in a London session, and then I do it again in the New York session, in one day I've made $2,400. That's essentially what I did. If you were to risk correctly on a legit, you've got a $2,500 account, right? So you got $2,500. Real risk management dictates that you should be risking no more than 1% to 2%, right? Well, what's that? That's $25 to $50. So if you were trading using the correct risk management on a prop firm, you're not going to see a payout for a very long time, because you need on an Apex 50k account, you need to make $2,660 to get a payout. Risking that, 1 to 2%, to get to whatever that is based on your drawdown. That's what it's basically 105%, 110%, something like that. So 106%. So before you can get a payout, right? You're not going to use the correct risk management strategy that you would use like with a personal 50k, 25k account. Like, you're just not going to do that. So the way that I like to do it is divide my risk up. I know that I'm not going to fail 10 trades in a row. My win rate is about 50%. My risk to reward is 1 to 4, 1 to 3 on the low end, and then extending all the way up to 1 to 10s. So I know that if I'm risking $250, I'm minimum going to come out of that with about $800. It's $2,000 if it's a 1 to 8, for example. That's massive. That's massive leverage, right? If I reach the roundabout 2k ballpark figure for the day, I'm usually done. Unless the opportunity is too good, it's an A+ setup, and I'm like, well, can I afford to do this based on my consistency target? Yes. All right, cool. Then if I can afford to do that, which is what happened in the later periods, I was like, well, I'm not just going to turn down free money, so I'm just going to take the trade and then make that money. I never intended to make 50% in terms of like this quickly, make 50% on the account. Or, if we're talking about a $2,500 drawdown, then, so I made 100x on the account. The risk management thing aside, basically when I started compounding the account, so when I got to about 10 grand, on the account, that's when I was like, right, cool, now I can scale up my risk. Or like, what, you know, once you've got a comfortable buffer in there where like, I think I actually started scaling up at about 7,000. So I had about $5,000 worth of buffer before I blew the account, before I even came back into the withdrawal threshold, right? So you've got $7,000 now, which is basically just profit. So 5,000 of that, give or take, is basically your cushion before you can't withdraw. It's a little bit less actually. It's more like 4,000, but let's say you got 4,000 of playroom, right? So now we can divide that again by 10. What do we get? We get the figure of 400. So now we can either have a larger stop loss, or we can keep using the same trading strategy where we're using these tight stops with the big rewards. You know, you're risking, then it's doubling, isn't it? So basically all I was doing was just doubling the amount of contracts when I got to this certain level. Well, I was basically lowering my risk to reward. I had to keep the consistency for my profit targets, but I was just doubling the amount of contracts. So I was increasing the amount of risk, but then taking less rewards. I was spending less time on the charts because my take profits or the amount of money that I was aiming for was achieved quicker. And then right up towards the end, I was risking like, what, 800? I think something like 800 per trade, roughly, on some of the trades that I was taking. And I was just going for one-to-ones. And I can find one-to-ones like that multiple times a session, multiple times a day, even on choppy days. Like, one-to-ones are just easy as, like, you can find them anywhere. You find a small retracement going up, and then you can buy in a discount and then take profit at the swing high. Done. That's a one-to-one right there. You know, risk down here, profit there, boom, boom, you're in. Like, you can find anything, right? What days did I traded Thursday. So I traded the London Open, I think. So yeah, I woke up really early. I think I saw this. Yeah, so I woke up for around 2. So I got on the charts right around here. And I know we're looking at this at hindsight, and I'm just, you know, saying what I did. But basically, this is the Asian range. This is the time from 8 o'clock New York local time to midnight. So I will wait for a protraction back into this range. And, you know, I saw that this high was rejected with a bit of displacement, meaning that we had a fair value gap. I trade based off of these fair value gaps. And I saw that. I was a bit late. I think I got to the charts around then, but I saw this consolidation. I saw it wick down into here. So what did I do? I placed my limit order right about there. I can't remember if I got it on that first one or if I got in here, but and then like literally my risk was just like that. Just stop below the low, 3-point stop loss. And where did I target? I just targeted above these highs. Did I catch that entire move? No, absolutely not. I don't need to. It's a 1-to-6 already. And then I think I've risked like, I think it was 6 contracts or something. That's $2,200 like in a trade. How much am I risking there? $360. This is already when I had, you know, 2,000. You know, here's my account right here. Move this out of the way. $75,000 in the account right there. These are the sorts of trades that you can take in London. You can have the super, super, super tight stop losses. Like when you start building this, like these bigger cushions of equity, you can push it. You can push it. Like people say, oh, it's not reasonable to have a 3-point stop loss. I do it all the time. I do it all the time. Every day in London session. Yeah, okay, you're probably not gonna be able to do that in New York, right? But let's say for example, I'm trading the CPI number, right? Well, whatever this was. I can't remember what this was. I think it might have been CPI or FOMC or something. It's some news event. You can see that by the 8:30 news candle. If I was trading this, I would wait for news to settle. I would look for probably an optimal trade entry going short, just because we've taken buy side here. What have we got? We've got equal lows right here. So we've got, yeah, those lows down there. It's a bit wonky, that one, but there we go. So we've got equal lows down here. I know that I could attack that sell side. So, and then there's fair value gaps down here. I don't tend to go for, I try to go for low hanging fruit. Right here, we've got 3 equal lows. CPI number, or the news high impact news driver, has taken out the buy side over here, London buy side. So I know with pretty good confidence that we're going to go lower, right? So what I'd do is I'd take an OTE number, which is all that is in terms of OTEs, optimal trade entry, is I'm looking to sell at a premium and buy at a discount, right? Really, really simple. All you do is take a fib tool with, you don't even need the optimal trade entry numbers in there, which is 65% and 79% retracement levels. You just need a 50% level, right? So let's take, you could take the entire price run, right? As long as you're buying above the halfway point, you're selling above the halfway point and buying below the halfway point, you're basically in a decent spot to make a decent bit of money, right? What am I looking for in the premium aspect of this? I'm looking for a fair value gap. For the most, I trade fair value gaps. You can trade breakers. You can trade inversion fair value gaps. There's so many PD arrays. Go watch the ICT core content, or the 2022 mentorship if you're new to ICT, and yeah, everything's in there. It'll take you a long time. Take you a couple. I'm about 2 years deep now, and I'm now confident with it. But this is, you could trade. I wouldn't do that. This is what I would do. Is I'd put my risk probably about there. I'd never risk more than 20 points usually during New York session, right? So that would be the reason why I'm risking here, is just because it's the only clear untraded to imbalance above the 50% point, right? There's a few in there, but they've been contested. What I'm looking for is to get in at a deep premium. If we introduce those numbers again right here, we can see that it comes perfectly into the optimal trade entry area, and yeah, that's it. That's basically how I would trade a news, a high impact news driver with obvious draw and liquidity. Buy side was taken a couple times, and yeah, I can talk about bias and stuff like that. There's so many different things I can talk about in this video. There's just no point in me going into too much detail. Hey there, guys. I just realized that I forgot to record an outro for this video. So if you guys want to see any more content like this, anything related to risk management, trade management, some live executions, whatever you guys want to see, please let me know in the comment section down below. If you want to stick around and see any future videos, hit the subscribe button, hit the like button. It helps out a lot. And yeah, I'll see you guys next time. Peace.